In this video, we take a closer look at how Consensus 2026 will bring together top leaders from the crypto space, major financial institutions, and global regulators shaping the future of digital assets. What makes this even more exciting is that Pi Network will be represented by its founders, sharing the stage with some of the biggest titans in the crypto world. Event dates: May 5th to 7th, 2026. Location: Miami, United States, Pi Network. Key session, May 6, 2026, 11:15 a.m. to 11:35 a.m. DT, 5:15 p.m. to 5:35 p.m. Kigali time. Featured industry leaders include Michael Saylor, Vitalik Buterin, Brian Armstrong, Brad Garlinghouse, Anatoly Yakovenko, and many more influential voices in crypto. This event could be a major turning point for Pi Network, connecting it directly with key decision-makers and power players in the global crypto and financial ecosystem. Like it's automatically bullish for Pi. That's the first mistake. Being on a stage is exposure, not validation, not adoption, not value. Let's break it down properly. Number 1. What Consensus 2026 actually means. Consensus isn't a hype event, it's a power network hub. The people you listed aren't there to celebrate projects, they're there to push narratives, attract capital, influence regulation, form partnerships. When figures like Michael Saylor or Brian Armstrong speak, markets don't move because they attended. They move when capital or infrastructure shifts. So the real question is, to that table that others don't already dominate. Number 2. Pi Network's position. Reality check. Pi Network is still not widely listed on major exchanges, not deeply integrated into DeFi, not proven at scale economically. Meanwhile, others on that stage: Vitalik Buterin owns smart contract ecosystem dominance, Anatoly Yakovenko high-performance chain plus active dev ecosystem, Brad Garlinghouse regulatory banking relationships. These are not peers, they are category leaders. So Pi showing up is not joining equals, it's entering a battlefield where it hasn't proven itself yet. Number 3. Why this could still matter if you think strategically. Scenario A. Narrative shift. Best case: if Pi's founders clearly explain utility, not mining story, show real ecosystem usage, announce partnerships or integrations, then Pi transitions from community experiment, emerging infrastructure. That's when markets start paying attention. Scenario B. Empty exposure. Most likely. If it's just vision talk, user numbers, future promises, then nothing changes. Crypto has zero patience for, open quote, we have millions of users but no liquidity, no utility, no integration. Clash scenario C. Strategic positioning, underrated angle. Pi's real advantage isn't tech, it's mass user base with KYC. If positioned correctly, that could attract governments, regulated digital identity, payment companies, emerging market fintech. That's where Pi could outmaneuver typical crypto projects. 4. The uncomfortable truth you need to accept. Most Pi holders are thinking, open quote, this event will pump value, close quote. That's weak thinking. Markets don't reward attendance, they reward liquidity, utility, access. Until Pi solves those, events like this are PR, not progress. 5. What you should actually watch during the event. Ignore hype. Focus on signals, high-value signals, exchange mentions Coinbase, Binance level, real partnerships, not vague collaboration, developer ecosystem announcements, on-off-ramp integration, low-value signals. We have X million users. We believe in decentralization, future roadmap without timelines. Bottom line. This event in Miami is a door opening, not a victory. A test of credibility, not a confirmation of success. If Pi delivers substance, this is a turning point. If not, it's just another moment of hype that fades in 48 hours. The usual narrative, nothing happens. Zero. To trigger a real market reaction, they need to hit 4 non-negotiable pressure points, and each one must be concrete, verifiable, and time-bound. Number 1. Liquidity. Here is exactly where Pi becomes tradable. What they must say explicitly. Named exchange, not top exchanges. Integration status, signed, in progress, or live. Timeline, specific date or quarter. Example of a market-moving statement. Open quote, Pi will be listed on Exchange X in Q3 2026 with full deposit and withdrawal support. Close quote, why this matters. Without liquidity, Pi is not an asset. It's a closed system. People like Brian Armstrong don't care about user count. They care about compliance plus tradability. No exchange clarity equals no serious capital. Number 2, utility. Here is where Pi is actually used at scale. What they must show, not describe. Real merchants accepting Pi. Transaction volume, daily, weekly, not total users. Live demos or integrations. Strong statement, open quote, Pi processed X million dollars in real transactions across Y merchants in the last 30 days. Close quote. Compare that to ecosystems built by Vitalik Buterin. They win because apps exist, users spend, developers build. If Pi can't prove usage, it's still theoretical. Number 3, ecosystem. Developers can build and profit here. What must be announced? Smart contract capability, fully live, not testnet promises. Funding or incentives for developers. Number of active apps or devs. High impact version. Open quote. We are launching a $50 million ecosystem fund and 200 plus apps are already building on Pi. Close quote. Why this matters? Anatoly Yakovenko didn't win with marketing. He won with developer velocity. No devs equals no apps equals no demand. Pi must prove it's not just mined, it's built on. Number 4, regulatory positioning. We are compliant and usable globally. This is Pi's only real asymmetric advantage. What they must clear, KYC model and how it aligns with regulators, which jurisdictions they are targeting, partnerships with regulated entities. Power statement, open quote, Pi is now compliant with digital asset frameworks in X countries and integrated with regulated payment providers. Close quote. This is where Pi could differentiate from chaos-driven crypto. Even players like Brad Garlinghouse built their entire strategy around regulatory alignment. If Pi owns this lane, it becomes attractive to governments, not just retail users. The killer mistake they must avoid. If they say, we have 18 million KYC users, we are building the future, big things are coming, that's dead on arrival. Markets interpret that as, open quote, no liquidity, no utility, no urgency. Close quote. What would trigger an immediate reaction, best case combo? If they stack even 2 to 3 of these in one announcement, you get momentum, exchange listing plus timeline, real transaction metrics, developer ecosystem launch. That's when. Attention, speculation inflows, price discovery. Final reality check. Standing next to people like Michael Saylor doesn't elevate Pi. Clarity, execution, and proof do. Right now, Pi has attention, community. But markets only reward access, use, trust.